All right. Do you know what economic things affect mortgage rates?
This is lots of fun. So we're going to talk about 6 things really quick of things that affect mortgage rates. So first thing being inflation.
So inflation, everybody knows that inflation, when inflation is high, mortgage rates tend to be high. If you go back and look at a graph of inflation and mortgage rates, they will almost somewhat mirror each other, which is kind of hard if you're not really in the mortgage industry to kind of realize. But we have just kind of come through, with COVID and some of that, some different, trying to get a handle on inflation. So when inflation is low, and we get those reports out all the time, that tends to help mortgage rates.
Yes, so that kind of leads into like the Federal Reserve policy and how that impacts mortgage rates, which we cover a lot. They affect mortgage, like interest rates across the board, like basically how much it costs to borrow money. So that does also impact mortgage rates when those rates go up or down. We talked about, them meeting 8 times a year, depending on if like what's going on in the market, is whether they'll, increase mortgage rates or lower them.
And a lot of times in those announcements, they'll announce what their plan is on the number of cuts for the year. And that could change between those 8 meetings.
Yes.
So you just kind of have to see what their policy is. The next one's kind of economic, or the bond market, and Ashlyn, I don't know about you, but I feel like every mortgage lender that I'm out there, they're either following mortgage-backed securities or the 10-year treasury yield. And each one, depending on, and you have to be careful because sometimes those charts are flipped. What do they call that when they're like more, like if you're watching the bond market, it's opposite of what the other market is. If it goes high, that means rates go low. But there are a couple of tickers out there that you can literally go.
I know what you're trying to say. I know what you're talking about, and I can't even.
Yeah, because a lot of times what it is basically mortgage rates will be very, very close to the 10-year treasury. But if you, and I like the 10-year treasury because the 10-year treasury matches the rate. So when you see the treasury go down in your charts, it's matched. But when you, like I've noticed there's some people out there when they post it, it's opposite of what it is that they're doing. So you just have to be aware, but there are things out there that you can watch. And that's really not so much as a forward thing of what's going on. It's if you want to look at a history.
Yeah. Which history always repeats itself. So that's why we constantly watching what that is. So I don't know if we covered housing market conditions. That's another thing that will impact depending on if you've got more, houses on the market, like more houses versus, nothing on the market. So that'll impact mortgage rates, kind of supply and demand, stuff that we learned in economics.
Yep. Economic growth. If you're in a strong market with low unemployment, that can lead to a little bit higher rates. If you're in a weak or a recession, that might lead to lower rates. So what I'm saying here is economic is whether it's a strong market, a not strong market, what everybody's kind of feeling, and the overall strength of the market, and if it's shaky, not shaky, that type of thing.
Yeah.
Which leads to the last one, global events and market volatility.
So market volatility, a direct example would be what we just saw with Trump with the tariffs and the trades and all that stuff. I mean, we saw what it did to mortgage rates. So things like that can immediately, COVID.
Yeah.
I mean, literally.
Any overseas political, unsettlement that makes everybody, it kind of goes back to the global market of like, we're in a recession. We're not in a recession, that type of thing.
Yeah, so everybody calm down. Just kidding. No, it kind of goes back to what you were saying earlier when you were going to teach that class tomorrow about a lot of this is there's no way to predict everything. We talk about history repeating itself or seeing what happens, but I mean, we don't know what the future is going to hold. We can only hope that obviously mortgage rates will go down, but all these things that play a role in it can change in a second. So it just depends on what happens. We talk about wars. I mean, there's so many things that could impact it.
Well, and that's the other thing is it's real important to get somebody that you trust to work with you when you're doing your mortgage loan because it's a gamble. It's just literally, you don't know. Our crystal ball's in the shop. We don't, we need to get it out. And it's just hard to be able to tell what is going on and what it is. But we hopefully that we're here and we watch it daily, we can tell you lock, don't lock, or here's your risk if you do lock or whatever. And again, nothing's set in stone. You can always renegotiate that lock, but hopefully some of this that we've shared today will help you.
Or for you.
Yeah. Help you with some of the decisions and things that you have to make if you're in the market for a home loan.
I like it.
All right.
All right.